It's Jim O'Sullivan, Chief Economist at MF Global. Thanks for coming in today, Jim.
Thank you, Margaret.
So how real is this read in terms of a better-than-expected gain?
Well, the trend is certainly not going to be up 7% per month going forward, and clearly part of this is the second round of the tax credit. And we've had a lot of noise generally because of the tax credit over the last few months. But you go through the ups and downs, and it looks like the trend is more up than down. And you look at the fundamentals, and mortgage rates are staying low. Consumer confidence is starting to come back. The labor market's starting to turn. So it does look like the trend is more up than down. But again, is this exaggerated? Probably yes.
Right. The build came in, 60,000 more homes sold than expected. Yeah. So slightly better than expected there. But home prices themselves came in right at forecast, pretty much flat in the month of February.
Yeah. And, you know, that's probably the trend for now. There's been a bit of noise in the numbers recently. There's even been some debate about seasonally adjusted versus not seasonally adjusted numbers. For instance, the Case-Shiller people are second-guessing their own seasonal factors. But you stand back, and whether you look at seasonally adjusted numbers or not seasonally adjusted numbers, and it looks like the big plunge in home prices ended just under a year ago, and you're getting a bit of noise now, partly because of the tax credit affecting demand, but I think through the ups and downs, home prices are more or less stable right now.
So explain what's going to feed off of the expiration of this tax credit when it happens. Like you referenced the Case-Shiller people. Robert Shiller was on Bloomberg, and he said that with the expiration of the tax credit, prices may be going down even further. Does that get people out there to come out and buy? Is there pent-up demand, or does that further depress the housing market?
Well, I think even that forecast itself is questionable, and I think they're second-guessing their own forecast that home prices are going to have another round of weakness. There's a bit of volatility, certainly because of the buyer tax credit. But again, through the ups and downs here, it doesn't look like there's a lot of movement in home prices. And even outside of the tax credit, it does look like the trend in sales is more up than down. The fundamentals are more positive than negative. Affordability has been boosted significantly in recent years by the drop in prices as well as the drop in mortgage rates. And again, income is coming back, confidence is coming back. So I think the case for a big second round of decline in home prices is not that strong right now.
You talk about noise in the numbers because of the tax credit. There's also a lot of noise in terms of conversation about where mortgage rates are going to be going and how that's going to factor in, as well as concerns about second lien mortgages and the degree to which government programs are actually helping right now. Connect all those dots for me.
Well, there's been, of course, a lot of focus on mortgage rates recently with the end of the Fed's buying program. And so far, despite the end of that buying program, there's been no increase in mortgage spreads. So if mortgage rates go up because there's a surge in mortgage spreads, then that's clearly negative for housing. If mortgage rates go up because there's a big increase in Treasury yields because we're starting to see 300,000 jobs a month on payrolls, that's a different story, because on balance, that's positive for housing because of the boost from stronger confidence and stronger home sales. At this point, though, mortgage rates are pretty much staying at their low. You're right around 5% on 30-year mortgages, which is no change from where we've been over the past year.
So it sounds like you're actually saying you're fairly optimistic about housing.
Well, housing is not the driver of the economy here. But I think the most important point about housing is that the big drag from recent years is gone, both in terms of home construction, which is starting to edge up again, and even more important in terms of home prices, where the plunge is over. The rest of the economy is what's leading us right now. The capital goods sector, even consumer spending is coming back. Exports are booming right now. Housing is probably more up than down, but I wouldn't expect it to be a big growth driver. But again, it is more positive than negative right now.
Well, we'll see in a week when that tax credit does expire what happens. Thank you so much for coming in and giving us your analysis, Jim.